Good morning, David Coombe here with the CBSAM debrief for Thursday the 28th of July. Getting towards this debt ceiling showdown, but the stalemate continues and the markets really don't like it at all. And we saw the Dow there down 198 points, nearly 1.6%. So really getting smashing there. And the broader S&P 500 even a little bit more, down 27 or 2.03%. So these are really big moves. The Nasdaq 265 even bigger still. The rest of the Americas down as well, although it looks like Mexico did buck the trend there a little bit. Europe, much the same sort of figures, certainly between 1 and 2% there. So really not looking very rosy there at all. Now this is yesterday's scene in Asia. Nikkei down 50, Hang Seng down 30, and the S&P 200 down 35.9. And the futures are really looking pretty grim here this morning, down 64. The SPY 200 and Nikkei 225 down 70. Hang Seng pointing up 18 at the moment. So it looks like on the SPY we'll be back down near that 4450, 4500 level, which I think we've said on a number of times is the place to be buying. If you simply did that, buying at that level and then selling on any sort of rally, it seems like that could have been a pretty profitable way to be trading the markets lately. Because certainly it doesn't seem like anything else is working that well. Okay, to the commodities, which seem to have a little bit more logic and rationale behind them. We're seeing West Texas crude come off a couple of dollars since the last trading session or so, and in fact we're actually suggesting that there's a way to trade that. I was speaking to Jonathan this morning. He suggests a stop sell at 101, and just basically to sell into any rallies up here, so anywhere in the high 90s with that stop at $101. We've seen increased inventories come through on crude during what is the summer drive time season in the United States, which traditionally sees demand go up. So we've got inventory growth in a high demand, historically high demand season, and that inventory is still going up. So that really should start to put some downward pressure on crude here. Looking at some of the rest of the space here, let's have a quick look at what's happening with natural gas. Okay, it's a green number, so I'm happy to see that, although not much of a green number. Into some of the softs, if we look at any big movers here, looks like cotton was a reasonably big move at 2.83. To the downside, we've got wool down 215, rough rice down 241, and coffee down 1.53%. So a little bit of a mixed session there. Copper rather holding ground here at 441, gold at 617.5, and silver at $40.40.5. So I actually saw silver coming off here, 0.4%, and gold currently up just 0.01%. So we feel that on gold, and we can have a quick look here at the Falcon Trader, that our resistance to the upside should be around 1661 and support to the downside around 1540. So that's our view on where the trading range is likely to be from here on in. So yeah, you can probably draw your own conclusions as to how you might want to trade that. Just have a quick look here at the currency pairs. Generally US dollar weakness, so euro buying 1.4369, the pound 1.6326, and the US dollar 77.9570. The Aussie 1.1029. Now it has been up higher than that, and we are now officially into new territory, uncharted territory. So a little bit hard to know how to play that one at this point. I would have thought US buying 0.9492 Canadian and 0.8013 Swiss francs. Okay, so looking at the economic calendar here, one of the things that also would have helped disappoint markets was the durable goods orders out of the US, which came in at, I better just refresh that. I know I've seen these figures. Okay, let's just go back here. Durable goods came in at a negative 2.1. The forecast was a 0.3, so that was a disappointing figure. Again, a red number on excluding transport, and capital goods down as well. So all in all, pretty glum picture there. Okay, so for today, Thursday, July 28th, we have the New Zealand rates decision. So that's already out, 2.5%, staying at that level. Often thought that a good pairs trade would be to go long the Kiwi, short the Aussie dollar, but just at this point it looks like they're holding firm here on their rates. We've got some Japanese retail numbers out later on this morning, and then some German unemployment numbers out early this afternoon, or early this evening I should say, through to some reported sales out of the UK for July, and then we've got pending home sales going into tomorrow morning. A whole slew of Japanese data to round out the week there. A little bit of private sector coming through tomorrow locally, and then going through to Canadian gross domestic product and US gross domestic product for tomorrow night. So that'll be a fairly big one. Could see a surprising number there. Equally, we could see a disappointing one, in which case it'll probably be a risk to the downside, I would have thought, given the current sentiment and the possibility that we won't have the debt ceiling issue sorted out. Okay, let's take a look again at the Falcon Trader here. We looked at crude here with a short trade. Gold, we've got this, we know what our range potentially is. We've covered stocks, commodities rather, and Forex, and that just led us to have a look at a couple of the trades that we like to keep an eye on, including BHP, which had a bit of a down day yesterday. We're still holding this inner upward trend line, so that's looking reasonably good. Pretty much back near the level where we got in at on earlier in the week, I think it was. Aluka had a little bit of a sell-off yesterday. That sort of dip for this type of stock strikes me as always a potential opportunity to jump back in on those dips. Kingsgate, a couple of the little gold plays here that I'll talk about seemingly perennially here on the AM Debrief. It's certainly been doing quite well here, making higher highs, higher lows. Medusa, similar situation. I know they had an announcement this morning, I think it was in regards to their copper production, but that's certainly been making quite nice gains here as well. St Barbara, seems like any sort of dip here is worth buying, and this is looking pretty constructive as far as a breakout above these previous levels here just below $2. Caltex still wallowing around the bottom here, and I wouldn't expect to see that start to move up until we see some relief from crude oil prices, although you would think that the strong dollar would be helping the case there, but apparently not. GPT continuing to like that. Good strong yield, 5-6%, unfranked. 306 is the price there. Lend-Lease, haven't had a look at that for a little while. 901 is the price there. Good strong We're still holding in this inner upward trend line here to my eye. Now, ResMed has fallen almost as quickly as it rose the other day. Did get a client out up near this 310 level on his encouragement there, and so booked a little bit of a profit there, which was good. But I'm certainly glad it didn't end up staying in that trade there. But this sort of dip here, back to this level here, certainly we know when we're wrong because we've got a really solid level of long-term support. Around this $2.85, $2.80 level. That's the weekly there. Okay, so I think that would be all I've got to say. So good luck with trading today, and till next time, bye bye.